What's going on, people? Crypto Blood. Hope you guys having a good morning. Getting started. I had to put some hype on. Get the day started. Make sure you jump over to cryptoblood.io to get your latest exclusive t-shirts. We got a couple versions of the shirts now going. Building a nice little catalog of shirts for you guys. Crypto related shirts, some Crypto Blood shirts, and some Webbot shirts. So get over there and check them out. And again, if you're in the Webbot chat room, there is a promo code. So just ask and you shall receive. It's your boy Crypto Blood. Again, what's going on? Today we're going to talk about volatility in the VIX index and comparing that to crypto and how cryptocurrency and crypto assets are very enticing to a lot of these prop traders. I used to be a prop trader for a company I founded back in 06. I prop traded for almost 2 years, and previously just traded for my own my own monies, and still do have an algorithm trading on FX right now. So whenever I see stories like this, I love them. Volatility is everything in the game of prop trading, and we don't see that in the equities game right now. So we're going to talk about that. There's an article out of FT that I want to show you guys, and we can talk about it, have a discussion in the comments of this video thereafter. So first things first, let's take a look at the market cap. So currently Bitcoin has taken a huge, not a huge, but a decent move down from its highs, and we're seeing money slosh over to the altcoins and crypto assets. So this is interesting. I'm really interested to see how this plays out overall going forward for the next, actually for this whole entire week. Be interesting to see where we end the week, close the week with Bitcoin versus the alt and crypto assets. Yeah, what we're going to talk about today is an article out of FT, or maybe not. I just got to pull it. It looks like it kind of reverted back, so just give me a second. I'm going to get this back up here. Actually, FT timed out and it wouldn't let me look at the article anymore. So anyway, I got it up, did some trickery widgery stuff, and was able to get a PDF HTML export of it. So I wanted to show you guys. So the article reads, DRW leads high frequency trading charge into cryptos. So here it says that let me just do something, lock this position. So it says here, intense price swings in cryptocurrencies are luring the highest volume traders on Wall Street as they search for relief from the low volatility blanketing financial markets. Proprietary trading firms, which bet their own capital in markets from stocks to futures, are wading into Bitcoin, Ethereum, and other cryptocurrencies, better known as a playground for small speculators and haven for money laundering. DRW of Chicago, one of the world's largest prop trading companies, has led the charge. About a dozen of its more than 800 employees buy and sell Bitcoin at a subsidiary named Cumberland Mining, which was established in 2014. Other firms have followed, including Jump Trading, DV Trading, and Haymeyer Trading Plus Investments, according to industry executives. At a trading industry conference in Chicago last week, a standing room only crowd massed for a panel on cryptocurrencies. So I'm going to show you. Well, let me read this first, and then we'll go into these charts here. The volatility in asset classes is at all-time historic lows. everywhere except for cryptocurrencies. So there's obviously a lot of interest in this space. I'm just going to pause right there and talk about why we are at a all-time low in volatility in pretty much all other asset classes. And I definitely want to hear what you guys feel it is the reason as well. Me personally, I think we have all-time lows in volatility in the stock market, in bonds, in every other asset class because of the Fed. And they've essentially, and the Fed and the government, I blame the government as well. They allow these institutions to pretty much run all the little guys out. They're all gone. And you're left with a lot of guys just shuffling money back and forth. There's no real price discovery. It's all fake. The order books are just flooded with high frequency traders and trading firms. And so literally, no volatility is a recipe for disaster, because once a catastrophic event occurs, guess what? There's no liquidity to really buffer the price moves in the markets. So that's my my 2 cents on why we have low volatility. There are no traders left. They're all in the game, and they've painted themselves into a corner. So bond market, equity market, all of it is just, it's done. So again, these are all reasons for us as cryptocurrency investors to be very excited, because we have a perfect storm. We have no volatility. When I used to prop trade, I lived on volatility, and for a matter of fact, when there wasn't any volatility, I lost money, because the way our trading systems were set up, and later on I ended up developing algorithms for FX, spot FX trading. It's easy to make money in trends. You may have your indicators that are set up, and it's the same way with me in how I develop algorithms. Like, I backtest, and actually I hope Spectre allows for MT4 MetaTrader. That's what MT4. I hope they allow for feeds to come through MT4, and then they actually gain a license for MT4. I would gladly move my algos over to a platform like that if I can pipe it through, because I coded everything in MT4. So volatility, like, if I have a direction, I'm going to make money. But once that market stops moving and it goes into a sideways pattern, then that's when you lose most of your money, because you don't have your algos don't have a direction. And people say, oh, well, when you get into a sideways market, just turn the algos off. Well, it's not that it's not that easy. It's not that simple, because you don't know when you're going into a sideways market, a trending, a sideways trending market. You don't know it. That's hindsight. You'll say, yeah, there it is right there. You would have turned your algos off. Nah, it doesn't work that way, because when you're in it, you don't know if it's just a consolidation period that's short-lived, or it's a long consolidation period. So again, you got these prop traders. They're excited because they see the price action that we have over here in the crypto space, and they want in. And that's a good thing for those of us who are already in the crypto space, because that means they have to bring their capital in, and voila, if they bring their capital in, boom, it's gonna skyrocket all of these cryptos to the moon, to be honest with you. Let's take a look at these two images that I actually pinned. They're very interesting. So the first one is Bitcoin's volatility versus the S&P on a 90-day annualized basis. So look at this, man. This is insane. Bitcoin's currently it's near almost 100% more volatile than the S&P. And this is out of Bloomberg. Amazing. And look at the S&P. It's just flatline because it's a dead market, and you have to blame the Feds for that. Blame the Feds, people. The second one showing prop traders pile into Bitcoin. So we're seeing well, this is labeled prop traders pile into Bitcoin, but really this is just showing price of Bitcoin. Price of Bitcoin versus the VIX index, and the VIX index is a volatility index, and it actually hit an all-time low this last quarter. I think quarter or month. It may have been month. But can you believe that we've had the lowest? The volatility index is so low, they've had to, over in Chicago, they've had to add new strike prices, lower strike prices below 9. It's just insane. Like, all of the chips are lining up, and if you don't know these types of markets, you may not understand what we have going on here. It's getting ready to really look ugly out here in the equities and bond market, in my opinion. So that is only good news for cryptos. Only good news. So again, this is showing you how bad the VIX is, just since 2000, almost 2014. This chart goes back to. It does go back to 14, almost 2013, I should say. But it shows you just how bad. I can draw like a trend line just going down. It's just sad, man. So VIX, the higher the VIX index is, the more price swings and more opportunity to make money is present within the equities market. So that's what, when you have a higher VIX, we as traders and hedge fund managers and stuff like that, they love that, and they're not making money, people. So they got to look somewhere else to make some money, and that other place is cryptocurrency. So you guys got to let me know your thoughts on this article. I would leave a link to this article, but it wouldn't do you any justice because it's a paywall. There's a paywall for this article, so you won't be able to read it. But very, very telling times, and you guys should be loading. I won't say you should be. I'm not going to give you financial advice. I would be loading the boat right now ahead of what's to come in the fourth quarter of this year for equities and bonds and sovereign issues that we will see start to show their ugly head. So it's up to you, but hey, let me know what you guys think about that article. I didn't really read the rest of it because I just wanted to kind of give you a background and show you from that article, give you kind of a synopsis of where we're headed, the trend, and how we're going to see. These are telling times on how money flows will capital flows will start to leak into cryptocurrencies. And again, I talked about this the other day. We only have and let me get the exact number for us. Current market cap, total market cap for cryptocurrencies is 167 billion. That is laughable. That is laughable when you talk about the financial industry, the other side of the coin, FX, bonds, you know, that whole game, equities. 160. Someone reminded me, and this is so true, the FX market trades $7 trillion a day. I'm going to repeat that. The FX market trades $7 trillion a day. 168 billion is nothing. So all of you naysayers out there not thinking that Bitcoin could be at 13, 20,000, 50,000 within a year, you better think again, and you better get your ass in this game tonight. Tonight, people, tonight. Again, like and subscribe, and I'll keep them rolling. Make sure you do join the Webbot chat room. We are 2,700 income. We almost have 1,000 people just in the crypto room alone. So man, we're slapping, we're cracking, we're having fun, and that's it. I'll see you people tomorrow.